Hey everybody, morning David, Michael, Alan, Ulicero, good morning everybody, Arturo, good morning, good morning. Whew, boy oh boy, the market just keeps grinding higher, higher and higher. This is dangerous, treacherous time in the market because the path higher is unclear. I know, lots of people, FOMO, and it sure does feel like a short squeeze, a FOMO squeeze, whatever you want to call it. Even somebody commented in the chat, I think it was Arthur, yesterday in my Discord chat that everything feels like a bubble. And I have to agree. Now, we can keep grinding higher. Like the market can do irrational things longer than you can afford to be wrong. And that's why I say the number one way you lose money is not being wrong. It's staying wrong. And, the number one thing that traders do to lose money is pay attention to news and react to it. So be careful. Remember, it's not being wrong, it's staying wrong. So I am cautiously just taking little bitty trades, nipping at this move higher, move higher. I don't have anything big short. Several people ask me, am I going in all in on the shorts? No. Am I going all in on the longs? No. I'm sitting in quite a bit of cash, taking some pot shots at various things that set up opportunities for going higher and some stuff going lower. And we have financials that are really in full swing right now, announcing earnings. We see rotation of money into financials as they announce earnings, and then we see rotation of money into tech as they start reporting earnings. And guess what happens today? Tesla and Netflix report earnings, and money is going to flow toward tech ahead of that, and we'll see what happens. Now, yesterday during 30 Minutes of Awesome, I went through the Tesla chart, and we'll go through that here again in just a minute, hit the highlights. So somebody just threw me a message and popped up red alerts. And here we go. So all trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. And remember that specifically for Tesla, because we're going to talk about the historical pattern here. Now, this presentation here is intended to be informational, educational, and fun, and is not a recommendation to buy or sell anything, all right? Don't go short Tesla because I say that the pattern is historically bearish on earnings, all right? Now, I'll discuss a couple options if that's something you want to do, but it's not a recommendation to do anything, all right? Don't buy financial instruments. Don't buy stuff from gurus. Don't buy recommendations. Don't buy newsletters. I mean, just keep coming here for free if you want to. All right. If you desire personal financial advice, you need to hire and consult a financial advisor that can give you advice. Now, if you want to chat with me while I'm live, morning, all the other people, got Dan, Valerie, Larry, Andreas, Craig, Patrick, Michael. If you want to chat with me while I'm live, all you need to do is be a subscriber. Link is over there on the other side. And click on that. A couple seconds later, you'll be able to chat. I know you can do it on a desktop. On the phone, you have to kind of turn the screen sideways and it pops up the chat, or it puts it below the video. Other than that, I'm not sure if you're not seeing it. If you're not watching on a TV, beats me if you can chat. Anyway, so that's how you do that. And you might as well hit the bell with the alerts because I'll do this again tomorrow after Netflix and Tesla earnings come out, and every morning. And then if you want to come join me all day and get updates all day long, link is in the description. The roadmap product is $5. It's the best deal I got going. Get you 3 months, get you in Discord. And yeah, but don't feel like you got to buy it unless you just want to come hang out with me all day. And the almost 2,000 other people that hang out with me all day. All right. There we go. Moving on. Tesla. Let's talk about this. So I pulled all the data back to 2015. Now, I have a buddy that works as a Tesla mobile mechanic. He suggested that since he worked there, there's only been 2 quarters that resulted in a pop. And he's only worked there a few years. And what I did was I pulled the last 8 years, 34 quarters, all the way back to 2015. And I did some analysis on it. You can see, did we pop? Did we drop? What was the color candle? All that stuff. Are we in an uptrend or a downtrend? I kind of, evaluated it all. And really, the color of the candle, the trend didn't really matter as much. But what I did find is that over 70% of the time, let me pull the exact number up on the other screen. It was 70.58% of the time, 70.6 almost, we saw a drop on earnings in Tesla. Now, most people consider something that occurs 70% of the time in the market something you can trade. I kind of think that might be possible. So if you want to chase after Tesla, I would not buy puts. I would probably put a couple shares on something like TSLS, a reasonable small risk. This tends to pop when Tesla drops, so you can go long this. I would not buy options on this unless you're just a glutton for punishment. The pop may, this is a 1x, so 12% up on this would only get you, the average drop is 12.18%. So 12% on this, you're only looking at 19. So maybe a $2 pop on something like this. And then the average time it takes is 4.7 days for that drop to occur. Many times the drop occurred in 1 day, and but sometimes it lasted quite a while. And then there's an interesting trend where about, I think 6 times, there was a bigger decline. If we got just a small reaction at the actual earnings, there was a bigger decline that occurred over 26 days. And that happened 6 times in the last 8 years, where we saw a bigger decline, upwards of 20% over the following 26 days. It was always 26 days, oddly enough. I thought that was a weird statistic. So there you go. TSLS, buy a share, buy 5 shares, buy 10 shares. And if we get a pop, you just close it like right away. Just if we pop on Tesla, close it right away. Although most of the time when we popped, we did tend to come back, but a few times we never came back. We have seen pops of 50 and 60% also. So if this went down 50%, that could be pretty devastating if you had very much. Yeah, look at that, 50%, take it down to 9. Ouch. So that's why I say only risk, like if you're going to risk big, risk 1%. If you're going to just to play the lottery, 70% of the time it's paid out. Just buy a couple shares. All right, that's not a recommendation to do anything. I'm just giving you an idea if that's what you wanted to do. Now, here's the list. There are all the earnings. Today we're going to look at stuff like Interactive Brokers was on the morning movers. We also saw Morgan Stanley, I think it is, or maybe it's Goldman Sachs. I get them all confused. Anyway, Goldman Sachs right there. Several of these moving this morning, and then tonight we have Tesla, Netflix, United Airlines, IBM, Alcoa, and Discover Financial. Those are the ones that I'm kind of watching for this evening, and I will talk about most of those tomorrow if they are moving. And then we also have, before we even open tomorrow, D.R. Horton, housing. We saw housing numbers come out this morning, or come out all week, kind of trickling out this and there. We see Nokia, Johnson & Johnson, American Airlines, TSMC. So lots of interesting earnings coming out. And then this is just the start of big tech. We'll see big tech keep rolling out over the coming weeks. All right. What's actually moving and what can we do today? Now, ES went full bull yesterday. Did not even decide to come back and test that roadmap line before it launched on up. Got way past the 2.0 extension. And even on the small pullback here, it went to ludicrous levels, 3618 of that little baby pullback. And I don't think I snapped it to the right place. Turn off my magnet. And I guess 2618, excuse me. Right up in there. Ludicrous levels. And this is feeling like a FOMO squeeze out. Like it really is. Like it feels like people are panicking, jumping in, even funds. They panic, they jump in with a big position. Smart money's not always smart. All right. Sometimes they just follow the herd. And this move up is feeling way cooked. Look at that. That's ridiculous levels. We may see that 45.99 get hit, and then that could be the end. All right. Please do not put all your cash in the market right now. Please. And please have a level where you're like, I'm wrong, I'm out. I can ride this down. because I don't want you to sit through whatever pullback that we may see here. All right, this could be a substantial pullback that we get in the market. How substantial? We could see it return right back down here to the top of the box we had in this March, April time. Like we hit a low here on March 13th. We consolidated here through April into May. We could return right back down into that zone and retest it. Now, if it doesn't hold, we could actually go retest the October lows. It's entirely possible. All right, this is on the charts. This move up doesn't have the right proportions at this point. Now, we could do the retrace and get continuation, and that would clear it up. But right now, this does not have the right proportions for continuation higher. It just, in the way I look at the market, it's very treacherous right now. It's unclear, it's dangerous, and it's highly unlikely that we go straight up to a new all-time high. All right, highly unlikely from this point. I know there's several other analysts and whatever saying that we can do it, but we did make a high right there, and that comes in right there at that 1618. Be careful. All right, this is significant resistance. We can turn down, and the way this moved up, it could result in either a double bottom or a lower low. I am highly cautious on that right now. And if this extended all the way, if we did get the lower low scenario, we could be looking at 33.65, even 3100, or crazier levels. But right now, I'm really just looking for support to hold at kind of that level we saw right there, right in here. Just kind of expecting it to hold. All right. Put all my fibs back where I had them. There we go. Any questions? Let me know in the chat. Anyway, that is ES. The S5FI, this is kind of the metric. When this pops over 80, I look at the market being overcooked. We're already seeing it drop back below 80. Could be the signal that we see significant retrace. All right, as the market ground higher yesterday, we saw this retreating. That's not exactly bullish signs to me. We see this occur over and over. The same thing. Then we get a little spike. You can see it right there. You can see it right there. And you can see it right there. And right there. If we spike up again and we make a lower high, watch out below. All right. This happens over and over and over. Right before we get a large retrace, we spike out, we come back below, we spike up again, make a lower high, and then drop. This is on red alert for me. If we spike up above it again, make a lower high, this can result in a bigger decline. Something I got my eye on. This is just updates on a daily chart. It's you can watch it live on barchart.com. So now, I'm not going to tell you to get out of everything, Lisa. I think it's prudent to tighten up stops, set alerts where if it starts going against you, you can take those profits. We may grind higher, and I don't want you to close out stuff and be upset with me because you booked profits and you missed out. It's a horrible feeling to miss out on further profits, but I do think it's prudent to set alert levels. Like if I'm happy to take profit if it drops below this level because it can decline further. That's the smart thing to do right now. I did book my profit on PLTR yesterday. Some little birdie inside me told me this is getting fully cooked. I do expect that move up to 22, but I had over $5,000 of profit on the line, and that's pretty significant for me. Let's be honest. I did not come from a wealthy situation, and I still don't have a ton of money that's not in retirement accounts. This was a heck of a move up off of those lows, and I felt like now was the right time for me to book that profit, and I did. We may experience a pullback, so be careful. This may go on to rock on higher. So, hey, Kimberly, morning, my dear. So be careful, be careful. Russell yesterday, I mentioned we might see that pop up to 1991. We went right exactly up there, right after the open too. It was a crazy big move. If we can get that extension higher, that will be positive. We need to get above that trend line, which has disappeared, oddly enough. Crazy. So I thought it was on all the charts. So there's a trend line right there. If we can break out over that trend line, 2200 becomes highly likely right up in here. 2180 to 2200. All right. So that's what I'm watching on Russell. That's IWM if you're unfamiliar. ES is S&P 500. If you're unfamiliar, that's looking fully cooked. Nasdaq is going for extensions. And you know what? If we zoom out, we're not all that far off of a new all-time high, which is really scary to me that we may see a new all-time high on Nasdaq while the S&P 500 still lags and Russell way lags. So we do have, this may double top. We could see a double top right here. Not an extension higher, but we could see a double top and roll over. That makes me really uneasy. All right. This move up has not had hardly any pullback at all. That makes me scared because that can be a corrective wave, what they call a WXY, and we can see the Y, and it can extend much lower. So Nasdaq is the one that's got me worried the most. The AI bubble hype could be coming to an end. Highly cautious, highly cautious. All right, oil. This yesterday was rallying in the face of a crude oil draw, which can be bullish. And if we get back above this high from just a couple of days ago, back above, say, 77.30, probably going to 80.15, possibly 82. And we may do that pattern that I'm always looking for where we come up, find resistance, retrace back down, and then get the extension back out to 82. And if this consolidation wedge thing played out, we may see it actually get up to this 84, almost 85 area right there. Which, look, we topped out right up there. That may also be where we come and test. Confluence of levels. This stuff all just kind of makes sense. We may see significant resistance there before we break on out. I do kind of feel like oil is set up to go to much higher levels. How much higher? Time will tell. Right now, we're still working on, this was not the best way to get started, and we may need a retrace before we make the bigger move. But right now, that's the short-term kind of outlook. The next weeks to months, could take us on out to August to get there. So next week, let's say 1 to 6 weeks could take us to get to work through this. All right. Now, if we turn down and break back down below this consolidation we did from May till June, we may go lower low. Keeping an eye on this one closely. I am long oil via UCO. Gold, looking beautiful, probably on the path. We may see a retrace in here, but that's set up for continuation right up that path up here to 2180, possibly 2200. Sounds a lot like the Russell chart. Bitcoin keeps consolidating. We need this to move. We either need a flush out back down to the roadmap line, or we just need to break out and hit some targets, which is probably going to result in a retrace anyway. So the big potential on Bitcoin is all muddied up for now. Just got to wait for something to clear up. Ethereum probably looks like it's going to drop still. Dollar, and probably going to do that same pattern that we always kind of track, where we go back to the 100 and then potentially extend lower. That extension lower take us down to about 98.40 on the dollar. PLTR, like I mentioned, I closed that out. Looks like the market's open. It's going to rally. It can grind higher. It kind of did bounce off the 1272, bounced back off the 100. The next extension would be 1928, and then retrace again, and then go higher. It felt like now was the best time for me to book profits. Consider protecting or booking profits if you're long PLTR. All right, at least chase your stops up, set your alerts. CVNA, look at that crazy move. I guess they lost less money than they expected, or than people expected them to lose on quite a bit of revenue. It's crazy that you do that much business and you still can't make money. But this is right back to this high. Coming right into that zone. That can be significant resistance. It was last time. We did this exponential move and we turned down and went lower low. If we do that again, be careful, all right? If we can get above it and stay above it for a couple days, extension's higher. But that was a crazy effing move. We went from $4 up to back up to 60 bucks. All right, this is a dumpster fire, dangerous situation. Please be careful chasing this thing, all right? Crazy move. GS, that's just churning in the zone. We've got lower highs so far. We need it to break out over this. Really, we need it over 360. We need it, aggressively. You want it over 350 to be chasing that with a long. T continues to be hunting for the bottom. We have earnings coming up on the 26th, next week. Be careful. This can go lower. This can extend lower. This is a garbage chart. All right. It's not necessarily a garbage company, but that is a garbage chart. Netflix probably going to grind right up to that 500 level, fill that gap. And then what happens? It becomes unclear. All right. I was very confident we would see this rally right up to 500. We were right in the neighborhood. We're not far away now. Less than 25 points. Meta was in the same situation. We are, right near that 320, less than 10 bucks away. What happens there? Again, not sure. All right. The reaction after that is what tells me what's going to happen next. So be careful. Man. Carvana, that can come all the way back to the roadmap line. That roadmap line right now, all the way back. That's like half the value. It can lose 50% very quickly. Be careful right there. Be careful. That's one of the most shorted companies out there. That's a short squeeze looking chart, and that can come right back down to the single digits. All right. Be careful. Back to where it came from, 86% loss. All right. That'll take a lot of effort to recover from, and looks like it's going to drop. So probably going to come at least back down to 40. Watch out. That's just watch out. XRP, nice retrace. And the regulatory hurdles cleared up. We have not gotten over $1 yet. We have significant resistance above us. This did a crazy move and, broke all the kind of things I look for. It really just went up and retested these highs and found resistance and rejected down significantly. Be careful, all right? It basically stayed in the range where we topped out right back here. Look at that. It did that same move. If it comes up here, finds resistance again, it can roll over. Be careful, all right? This is not the next replacement for Bitcoin and Ethereum. I don't care what anybody says. All right? The Fed now is built on Avalanche. It's not built on XRP. It's not built on Ethereum. It's not built on Bitcoin. It's built on Avalanche. So, be careful. And if you thought Fed now built on their own system, no, they built it on Avalanche. Funny enough. Anyway, ATVI, probably going to close the deal with Microsoft at 95, and this may drift up right into the deal close. TOST, getting slammed back down a little bit, finding resistance. That was a higher high, but retrace might be in order here. And this is overlapping and slightly dangerous. This is not really the most bullish potential yet. Looks more like a leading diagonal. Unity, yeah, beautiful. This probably going to rally up and retest the box, the top there. Then if we can get out of the box, we'll see what happens. But 50 to 60, that's it's about 25% gain just to go up and retest that high. Looks pretty strong. That's not a high probability move in my book, but that does look like what it's likely to do. VZ, almost moving in sync with AT&T. Got earnings coming up next week, and that's a garbage chart right now. We don't have a reversal pattern set up. I don't care what anybody says. Now's a great time to buy it because it's so beat down and low. It's also the ability of this thing to cut in half again. So please be careful. I don't care what the book value or anything is. DMAQ, deep medicine. I mean, that another dangerous chart right there. Be careful chasing garbage stuff. I mean, that barely moves and then it does some crazy moves. That's not tradable to me. Omnicron, right back to the roadmap line. Classic. I put all the shorts on here first, all the stuff that was dropping, so that's why lots of these are looking drop, and then we'll get into what's going up. So came up, oh, missed the 1272 and then retraced the roadmap line, the classic pattern. If it holds support in here, it can go up to possibly 102 next time. Let's see, check support. Yeah, it's right down at support. It needs to hold this area and turn up. If it does, that's positive. If not, watch out. We can go deeper here. It's got to hold these lows. Hold these lows right here. So that's the support on Omicom, OMC. All right, IBKR. Yeah, nice moves here. Potential to go higher. That was a 3-wave retrace. That was a beautiful, actually bullish correction right there. If we can break out over these highs at 87, looking for 95 on the extension higher. So I'm not all bearish and negative. I just threw the negative stuff in here first. So this one actually looks like if we can clear these highs right here on a daily close, we're set up for 95. J&J, unable to hold that. That's kind of a bearish setup, even though we're getting a little positive action here today. Extension lower would not surprise me. Would not surprise me to go down and test this. We do have earnings coming up next week. BX, that one on a monster run here. Beautiful. They've got their Bitcoin ETF. If we're working on a bullish setup here, 115 would be an upside target. And it may do this classic pattern where we see this, and we see this. It would be typical and classic. We are coming up into this zone. Resistance right here. May need to spend a couple days getting through that. And then come back and retest it and then pop up. The bigger pattern, cooking on Blackstone. Do have that 618 coming in right there. If we can get above that, it does set this up to potentially go way on up, 170, almost 200. Beautiful, but not quite there. We need the retrace. We need, this may cook, fully cook, retrace, come test the roadmap line somewhere out here in November, December, and then launch off. And funny enough, that's kind of the pattern I'm looking for in Bitcoin, to do an extension now, retrace into late this year, possibly January, and then take off into the halving event next year. Airbnb, this is a measured bounce, and I am quite bullish on this. I am long Airbnb, looking for this move up. I need to put it back in logarithmic, and that move can be up to 200, 180, 200, possibly 260. I'll probably be jumping off at 180. My position's 140, 160, and it's quite profitable right now. Western Alliance, right up to the roadmap line. That's the test. That's the resistance. Otherwise, this looks like a garbage chart going lower. Celsius keeps grinding higher. My target right up there at 170. We'll see if we can get there. And you can see up to the 1272, retrace back to the 100, up to the 1618, grinding through, not getting a deep retrace. Next target up, 272. ELV, God, I would be so careful on this. That can go lower. That's still holding kind of a lower high. It could be trying to break out of this downtrend. Be careful. I would not chase this until it can get up here, stay up here, and then go higher. And that fib needs to come all the way down here. significant resistance right in there. Right in that zone. Humana. Potentially bouncing, but potentially just bouncing before it goes lower too. So not keen on that one either. Now, golly, look at the moves on these things. Not sure which way to go with this. That looks like the move. Potentially going to top out at 660, retrace back to where it is at 600, and then get the extension out to 657. STZ, golly, look at that thing go. Potentially breaking out above this 1, 2, 3, 4, 5 top, and 274 on the upside, 292 above that, and it may do the pattern where we come up to here, we retrace back to here, and then we go up again. Not predicting time, just time is the hardest thing to predict. So MDB, I mean, gapped right up above the resistance. I mean, it skipped the gap. Like, it gapped down and then gapped right back up through that zone, coming up to resistance of these prior highs. Watch out for retrace is what I would say. It's going to take a lot of effort to go out to new highs. Salesforce, CRM, right up to I predicted the resistance there, right up to it. Now we can go blast on out, retest the highs, but right now, I would be careful. Turn down back to the roadmap line would be what I expected. That's what I predicted probably a month ago, back in June. Be careful. Tesla now, I discussed that at the head of this thing, 70.6% of the time, we see a drop on earnings of 12% on average, 12.18%, I think. Yeah, and be careful. A 12% drop, what would that get us? Somewhere right down around 260 at this point. And it's not unusual to see 30% drops on earnings, which can take us right back to the roadmap line, right back to the support down here around 215. That there were many instances of 30% drops on earnings, many instances. So be careful, please. If you're a long Tesla, you may not even get a chance to get out before that correction. So if you can't survive a one-day pullback, please be careful. All right, please, please. TSLS, if you want to play it short, buy a long here, and TSLL, if you think it's going to go higher, you could buy one of each of these and play the lotto both ways. If it pops, you make your money and cover the loss. Potentially 1.5x, it has leverage. You actually come out better on the long if it pops. And TSLS, if that one pops, this one's going to drop. And I don't know. It's a way to play it though. If you want to put $40 on or $37 on it, $40, see how roll the dice. There you go. There's your option. You can do it with $37 and not feel FOMO and left out of the move. All right. Don't risk money you can't afford to lose. It's not a recommendation to buy or sell anything. Carry. Stuck in the box. It's bearish. It's a potential sloppy head and shoulders cooking there, and we could see this break on out. If it does it, if it can get going, could see it pop back up to that resistance up there. It might be why I have that line drawn there. Don't remember why I drew that, but right there. Potential head and shoulders. Those things play out right there. Size of the head. Could take it back to 60. I would wait till it's above the roadmap line. That's still like a 20% gain you could pick up right there, just on shares. And options, I bet you could rake it in. Usually options power stuff 10 times more. So you could be like 600% on some options. But I would wait until it actually shows it's going to be bullish. All right. All right. Beto haven't, not unless Bitcoin does something. Beto has no chance at doing anything unless Bitcoin moves. This is a derivative of Bitcoin. Discuss Bitcoin at the head. Right now it's just consolidating. there's always a chance that Bitcoin goes pachow, like some sort of crazy news comes out. We saw last Friday, BlackRock, their spot Bitcoin ETF their application was accepted, not approved, but accepted by the SEC. They had previously rejected it on all submittals, so it was accepted on last Friday. That news kind of slipped through the market quietly. We didn't see Bitcoin do anything, so that's sitting out there. All right, for whatever reason, the mainstream media hype train did not pick that up and run with it, but it quietly slipped in. So this could be the sleeper news that pops Bitcoin. Now, I don't believe that actually anything reacts to news, but that could be the catalyst. All right, we're consolidating. This chart looks like it's going to go higher. That could be the excuse that the market needs for Bitcoin to go higher. All right. Bias for the day. Bias for the day. Bias for the day. That's the ETF that you were wondering about. Yeah. Well, BITO is a spot futures ETF that tries to replicate the daily futures in Bitcoin index. If you read the prospectus on it. Bias for the day. Cautious, man. We're grinding up into these extensions. It is ridiculous extensions at this point. And this chart may be the one that's telling us where we're headed. I mean, look how close we are. Really effing close. Be careful. That's the next resistance. All right. Have a good day, everybody. It would not surprise me if we got a rug pull. We popped up there, hit that kind of level, and then everything, all the dishes just went crashing down. All right. I'll be in Discord all day. Links in the description right down below. It's like $5. You can get in there. Come join me. Otherwise, I'll see you guys later. Bye for now.